So what to expect from Lemonade's Q1 2023 earnings letter, earnings call. Here's my expectations. Let's walk through it. First of all, I do hope they answer this say question, or at least give discussion around where Lemonade is headed in regards to AI, because I don't think all investors truly kind of understand this. When I've talked with any of Lemonade's management, there's definitely a focus on a long-term, hyper-efficient, very efficient organization, and I don't know if that's fully grasped by investors. So if you haven't upvoted this say question, I encourage you to do so. With a wave of new AI developments seemingly happening every week, what specific ways does Lemonade envision using AI to improve customer delight and organization efficiency? For example, maybe improve chatbots, extraction of data from pictures, documents, videos, etc. It'd just be great to hear more details, more of a picture of where Lemonade is trying to head in this direction, because I think people understand what Lemonade is doing right now, but trying to understand even in broader terms or more detailed terms of where that could be going in the future would be really great. And what could we expect numbers-wise? This is my Lemonade projections model. You can support the channel on my Patreon. I'll leave a link up above. And also get full access to this model by doing so. I'm going to walk through this sort of next quarter, what I have here, at least some of the details. And there could be a lot of things I, of course, have wrong. There's some of their operating expenses really to jump around quarter to quarter, and I could be totally out to lunch on some of those. It could really affect the bottom line number, but we'll see where we end up tomorrow after the earnings and at least have some idea by walking through it here now. So I have total customers growing just a little bit, and I have actually premium per customer as being flat, because I think as a whole, their strategy right now for this year, while they're waiting for regulator approvals of new product pricing to come into effect, they're waiting to roll out new products in more places. They are going to push more into renters insurance, is what I'm understanding. So that's going to lower sort of the average premium per customer. It might even drop. So I'm getting to an in-force premium of $635, which is in their guided range, $635 million. I have a gross loss ratio of 86% from 89% the quarter before. Gross loss ratio really has to continue coming down. It's been really jumpy in previous years. You can see a few years ago when they really were more of just mostly renters insurance, some homeowners insurance, they were getting down into even the 60% range. That's where we want to head across for all products. But the mix right now has been in the 90s, even 96, even 120% with that was a Texas freeze going back at the beginning of 2021. So I'm hoping this quarter, without any real catastrophes, we're heading down positively in the correct direction, heading downwards. I want to continue to see this number drive down. Super, super important that keeps coming down. The way I input my churn and annual dollar retention is I have 23% input my churn of customers from 12 months prior. And that's been trending down. We were at 31% all the way down to 23%. I'll show you that. Actually, it was 40%. You're going back to 2020, trending down, all the way down to 23%. This number might actually rise this year, again, if they go more into renters insurance, simply because you have more renters on the books, you're adding more renters, and those tend to be people that might churn just because they have more transient lives. It's a student that gets renters insurance for 6 months or a year, 10 months, or whatever it is, school year, 8 months, and then leaves and moves somewhere else. So maybe they come back to Lemonade later on. But I still have it at 23% sort of across the year, and then actually rising into next year as more of those renters are more sort of turbulent and come or go from the company. But with that, you calculate it out, you get 83% annual dollar retention. So slight decrease from where we were the quarter before. This also is affected by how the premium per customer changes. As premium per customer is rising, it makes annual dollar retention look better. So eventually later on, that's going to help annual dollar retention, or annual dollar retention will reflect that if they start rolling out more products in more places and the average premium per customer continues to rise. That's going to help that during that rise. But for this quarter, I'm shooting for about 83%. I had a previous video and I had 95%, but I had made an error where I'd forgot to back out the effect of Metro Mile on the premium per customer. So I adjusted that a little bit, and now we're at this range. Just makes sense. The way I calculate my sales and marketing costs is on a per customer basis, and I have a $200 per new customer. And by new customer, I mean the new customers. That shows, the customer difference quarter over quarter, which I have as 27,000 new customers, sort of a small amount of growth right now. So those customers plus also any customers that churn that you're then making up for. So I had for 12 months prior 346,000 customers, and you take a quarter of those customers that churned over the last 12 months, assume a quarter of those plus the net new customers. That'll give you sort of a total amount of customers you're paying for, and that works out to 22.7 million, less than it was last quarter and even less than it was a year ago, but at about 15% of your gross earned premium, $22 million there. Other insurance I have just slowly rising, still higher than it was a year ago, but slowly rising quarter over quarter to about 9% of gross earned premium. Tech and development, again, these are just, I'm really just guessing on some of these numbers. Putting in 1%, and we have at 16% of your gross earned premium, which again is in line with where we've been the last 3 quarters. So I think that makes sense. General administrative, I have rising 5%. I hope it's like flat or even negative potentially, because we're at 32 million last quarter at 31. I hope that can really flatten off ideally, but 5%, and we have 17.9 million, or 22% of your gross earned premium. Again, it's been in line with where it was a quarter prior and some of the previous quarters in the last few years. Total expenses then, I have 61% of your gross earned premium, 92 million, versus 63% the year before. Where we've been so far, also expense history has been tracking down. So churn has been tracking down, expenses have been tracking down. If you look on this sort of all the way from 2018, they're way up at 400%. They continue to track down as a percent of gross earned premium. We're at 63% last quarter, and again, I'm hoping that improves to 61%, and then continuing to see its decline years out from now. But as I was saying, expense ratios have been improving, churn has been improving, and the other third thing we really want to see improve is the loss ratio, which has been a lot more jumpy. And so we hope that we will see improvement in the loss ratio. I have 15 million of stock-based compensation, and I have an overall adjusted EBITDA of about $48 million loss. If you look for the full year, I'm at about almost $190 million loss. Now, I hope maybe I'm just way too optimistic. I hope I'm not too optimistic. I hope they actually can achieve something like this, because their Q1 guidance for this quarter was a $63 to $65 million adjusted EBITDA loss and $240 to $245 million full year loss, which I said in a previous video. I'll link it right up above here now, that I said I did think they were sandbagging in this guidance for various reasons, and I really hope I am correct in that. And so my numbers reflect some of that sandbagging or a major beat on that. But I really think if we want Lemonade to succeed and become a profitable company, we have to hope they're not actually hitting what the guidance is saying, but they're actually hitting somewhere closer to what my model is showing. Okay, let me know what you thought of this in the comments down below. If there's something I missed or something oversight I made, please let me know. I really do appreciate that feedback. And thanks for watching. Remember, it's in the bag.